Good morning. This is your guy, Diamond Prince. I just want to tell you how you can be able to make money with crypto trading, what I call future crypto trading or derivative trading. All right. In this trading, you can use $100 to make $1,000. You can use $100 to make $5,000. Now depends, okay, on how you learn this trading. Okay, now I'm going to be showing you how you can be able to start placing your market, what you need to do. What is future trading? Future trading is a prediction of the market movement. If the market goes up, all right, and you predicted that the market is going to go high, which I call long, and now you are making profit. If you predicted that the market is going to go short, which is down, you are making what? Profit. All right, let's just look at it. All right, with Bybit, you can get this thing done. Okay, now look at this. I will go to derivatives. Derivatives is the next of future. That is the next word of future, right? Derivative. I click derivative. Okay, in this derivative now, I have comes in now, right? You see what I call up here USDT PEP. Now USDT PEP is the future trading or derivative trading. Okay, in this place you see beside this Ethereum here, you see this three dash. Okay, I'll click it. I'll click this three dash. Then you're going to see different coin that you can do what you can trade. All right, as a beginner you can only trade Bitcoin and Ethereum so that you'll be able to maximize profit without losing what your money. Okay, let's look at Ethereum now. Okay, I click an Ethereum. Okay, when I click Ethereum, so what is the next thing I should be looking at? Okay, of these charts to know where the price is going. Okay, look in at this price. What is happening? We have let me say 15 minutes. Okay, looking at this price, underneath you see what I call MA moving average, EMA exponential moving average, or have BOL, that's Bollinger Band, MAC, Marvel, MACD, KDJ, and RSI and WR. All right, all these are signals what you should check before you do what you enter your trade. Okay, now let's say that maybe you have already know how to enter your trade. So what do you do now? All right, you need to come to where there's chart here, there is trade here. I'll click on what? I'll click on trade. All right, I've clicked on trade. See where we are now. Okay, what happened now? I'm going to look at this place that say cross 20. Cross 20. In this cross 20, we'll have two of what you can do, have what I call isolated. I'll have what? Cross margin. Now what is isolated? Isolated is when you start your trading and it's choose isolated, which means your money stands alone, is going to be closer to your liquidation. If you start trading with isolated, it has its own benefit. Okay, now if your money is not that much, your liquidation might be very close to your what? To the entering price. Okay, now we have cross. The cross will give you a far liquidation, and also it has its own advantage and disadvantage. The advantage is that it gives you a far distance of liquidation, and if the market is going against you, you start extracting money from your wallet, and if the money eventually touches liquidation, it's going to take all the money you have in that derivative wallet. All right, and now look at these times. We have one, all right, to what? To 100. All right, this is what I call leverage. A leverage means you are borrowing money from the system, okay, to trade. It's very awesome that maybe you start with small money, but you borrow what? Money. It's good to use 100 times, but it's very high risky. All right, to use 100 times, okay, to do what? To do your trading. All right, let's say even though you use 50, all right, it's still good, but it's have what? A high risky. How is this? When you let me say now you are starting with $100, you are now going to say $100 times what? 50. All right, $100 times 50, you are getting about $5,000. All right, now in looking at that, now if market go your way, all right, it's going to be, if market did 1%, that means 1% of this what 50 of your money, and that is going to be what you are getting. All right, now, but if the market go against you the same way, it take higher percentage out of your what, out of your margin. Margin is your cost, margin is your capital. All right, then we can say, let's just use, okay, let's use 20 what margins, and this is 20 margins. All right, we use 20 margins. All right, and in these 20 margins on what, on cross. All right, now after doing that, what do you need to do? Remember, you must do a calculation of the amount you have times the leverage you are leveraging on. If your amount is $50, you times $50 times what, times 20. All right, then what it give you, you can just enter market with 20% of that your leverage. Now if it gives you 2,000, 20% of 2,000 should be 400. That means I will enter what, 400. If 20% is 200, then you enter what, 200. All right, now once you enter the market, example, now we'll see what I call here now limit. All right, let me click it, or have limit, or have market. What is limit? Limit is to do what, to insert your own price. All right, what is the price? Once I want to buy at 1,805. All right, I want to buy at 805. Okay, and on my what, my own is $100. Okay, now if I put $100, it's telling me is about $4.6. Okay, which is my own money. That means the leverage I'm leveraging here is what, 96 what dollars, while my own is only what, $4. All right, once I did that, I'll come to this place, say take profit and stop loss. All right, I'll click what, take profit and stop loss. Now I'm buying what, long or short, so depend on the market you're choosing. All right, if it's long, what do? You can take profit by what, by ROI, by percentage. If I said I want to take profit at what, 20%. All right, that means when market goes to 1,818, all right, that is when I'm going to take my profit, and my profit is going to be almost $1. Then I will say lost, lost. All right, stop loss, I can say 10%, and this 10% means if the price goes to 50 cents, all right, then I will take my what, my loss. I'll click done, I'll click what, confirm it. All right, then I'll now come here and click what, buy, either buy long and buy short. Then the market is what, is set. Now if you look at here now, under this Ethereum that I bought short, you see there's what I call a liquidation. Okay, a liquidation. The liquidation here is 2,760 what, 67, which means if this market now goes high to 2,767, that is when it touches my what, my liquidation, and it cannot take what, it can take my money. But you must make sure your it didn't touch your liquidation. Before you even touch your liquidation, they are going to send you an email to notify you that your coin is going against you, and then you need to do what, you need to close such. But if you have put your stop loss and take profit, you don't need to bother anything on that, because once you get to that your take stop loss, it will close automatically. Once you go to take profit, it what, it take the profit and close what, automatically. That is how it runs. So in this trading is lucrative, guys. If you have not subscribed to my channel, just click the subscription button and click the notification button, so that any new one I bring up, and you can be able to get notification and get it. All right, now I'm going to be teaching you how to know how to take all your how to know the candlesticks, and when to enter market and when not to enter market. Thank you so much. All right, let's make money with cryptocurrency. Let's make money with crypto trading.